harsh truth of our markets, which is why we have to be extremely clever as smaller retail traders to understand when an institution is trading. And if we can track when an institution is trading or when a bigger time frame player has entered the market, it makes sense to just follow what he is doing, right? I want you to remember what I just told you, because that's a concept that we're going to be exploring when we start looking at strategies. So the key in the markets is to understand that there are different time frames who are trading at all times. So we have scalpers, which is your shorter time frame, who could be there trading only for the next 5 minutes. And on the opposite side of those scalpers are the longer time frame traders. There are a lot of scalpers, by the way, and longer term time frame traders are few. But whenever the longer time frame comes, they tend to dominate price action in their particular way. Opposite ends of the curve over here. Then we have intermediate term time frames, the day time frame, and the shorter time frame. And accordingly, they move the markets in different ways. Now, on your screens right now is a very symmetric distribution, which we call the Gaussian profile in the market profile. This is kind of a balanced distribution where one particular strategy would work. Not all strategies work all the time for every single market situation. But when you see something like this, there are certain strategies to be made, and there is an opportunity in this particular chart to trade, which is different from the opportunity in this chart. In the previous chart, knowing how that chart was made, I can tell you that the longer time frame trader was not active in that chart. And, we're gonna be exploring how I made that observation, or how I picked up that information from the chart later. I'll make sure that by the end of the day, you'll be able to see when the longer time frame is in the market or not. This particular chart is telling me now that there is a longer time frame trader in the market, because the distribution is asymmetric, and I have to reinvent my strategies. I have to look at this new information which has come in this market, reorganize myself to ensure that I stay profitable and with this particular trader. I'll explore this chart in detail. I just want to present this information to you. We'll be looking at more of these charts as the day progresses. Three main concepts we're going to be looking at is PVT, price, volume, and time. The reason we're going to be looking at them is because price advertises opportunity, time regulates that opportunity, volumes measure whether that opportunity will be successful or fail.